Hello, we are DST Investments, a consulting service provided by NAMCOA, a registered investment advisor also known as an RIA. NAMCOA provides real estate investment advisory consulting services on 1031 and 1033 exchanges and Delaware Statutory Trust, which are most commonly known as DSTs. As a registered investment advisor, we advise clients as a fiduciary, putting our client interests first. Our DST consulting team is also duly registered under a FINRA member broker-dealer, where we have access to all the DST sponsors, including many 1031, 1033, and Opportunity Zone solutions. In our world, we spend a good deal of time just conducting research and due diligence on these sponsors and their investment solutions, which change weekly. We need to be on top of our game so we can help clients make the proper decision based on what the landscape looks like. Today, we are going to discuss the types of DST properties available for both cash investors and 1031 exchange investors.
You may be asking, which type of DST investment is the best fit for me? What should you, as an investor, expect to find when looking at DST replacement properties? The truth is, the DST market is changing every day. That being said, the advisors at DST Investments have access to all types of DSTs, and the following is an example of DST property types that have been offered and that we can typically assist you in acquiring. Some are consistently available, whereas others are only available occasionally. Some of these DST properties fit into more than one category. For instance, there may be a portfolio of storage facilities or a portfolio of multifamily apartments. Most DSTs, by design, are leveraged, meaning that they have a mortgage on the property or properties in the offering. In this case, each investor would be assigned their share of the debt. This is great for exchangors that need debt replacement to satisfy the requirements for a tax-deferred exchange. One of the advantages of this type of financing is that it's already in place and non-recourse to you, the investor. This means the investor does not need to qualify, nor do they guarantee the loan. The property or properties serve as collateral for the loan. There are also typically a small handful of debt-free DSTs available at any given time as well. We have special strategies for cash investors. Regardless of what you're looking for, our advisors can help you navigate the ins and outs and ultimately find the best solution for you. Balancing all the requirements for your 1031 exchange is our specialty. But let's get started addressing the types of DST properties that are typically available. Apartments, also known as multifamily properties, are the number one choice for DST buyers and represent about 50% of all DSTs being offered. They are generally viewed as lower risk than most property types, but may be on the bottom end for cash flow. There is normally a broad selection ranging from newly built Class A apartments to Class B apartments in need of some improvements, providing a value-add component to increase potential upside. Net lease DSTs, also labeled as triple net or NNN, are generally single-tenant buildings with long-term leases. These typically provide the most consistent cash flow and are desired in down markets, but they provide little, if any, growth potential. These are a great fit for those looking for security of yield. The tenants are nationally known and are often credit-rated. Walgreens, CVS, AutoZone, Dollar Tree, Fresenius, and Tractor Supply are a few examples of what you're likely to see. Medical office buildings have been a consistent part of the DST market for over 10 years. Tenants often include hospitals, doctors' offices, plasma centers, and dialysis facilities. With the amount of tenant improvements made to these types of buildings, medical offices generally see less tenant turnover. Industrial properties come in many different shapes and sizes. With large open spaces, they can be utilized by many different tenants. Most industrial properties have a few tenants and low turnover. With the rise of internet shopping, the need for industrial properties has risen over the past 5 years and thus have become increasingly popular. You may hear the reference to Amazon distribution centers, which has been a recent offering. Hospitality DSTs are starting to see a comeback after their peak before the previous recession. Most hospitality DSTs focus on the business traveler and are under the Hilton or Marriott flags. These DSTs are viewed as more risky than net lease and apartment DSTs, so they may offer cash flow at a higher rate. Since hotels are only leased for a day at a time, they react quickly to declining or improving markets. The variety of office DSTs has changed greatly over the past 15 years. Once dominated by multi-tenant buildings, the current DSTs are predominantly single-tenant buildings. Most office DSTs are the corporate headquarters or an essential property to the tenants. This has resulted in lower cash flows, but has created more stability in the properties. Assisted living DSTs offer several of the same benefits to investors that multifamily properties do, even though they can carry additional risk. Due to the amount of care needed in these types of facilities, rents generally range from $2,000 to $4,000 a bed or more. The DST market also has some lower cost, lower care senior living facilities and higher cost, higher care memory care facilities. With 10,000 baby boomers hitting 65 every day, long-term demand is expected to rise over the next decade. Portfolio DSTs could be a great way to diversify. Apartments, medical office, storage, and net lease are often found packaged with 2 to 20 different properties. These can be spread out over different states or with the same or multiple tenants. Self-storage DSTs are desirable for several reasons. These properties perform well in recessions and have little to no releasing costs. Although the demand for these types of DSTs is high, availability is limited. Much like apartments, the high demand for properties viewed as lower risk drives prices and results in lower cash-on-cash returns. Even with the rise of internet shopping, retail properties continue to perform well. Most retail DSTs are either one property or a portfolio of single-tenant buildings or large power center properties with anchors such as Kohl's, PetSmart, and Target, and a variety of smaller national and local retailers connected between them. Low-cost and recession-resistant tenants are in the most demand. Zero-coupon DSTs are designed for one thing: to get as much debt in an exchange as possible. Leverage will be near or slightly exceeding 80%. They do not have any annual cash flow but are structured to pay down the debt of the property over a set schedule. Long-term leases with credit-rated companies are standard. They are commonly used by exchangors in combination with other investments. Many exchangors will invest enough cash into zero-coupon DSTs to meet exchange debt replacement requirements, then put the balance in debt-free deals. The benefit to this strategy is diversification, debt reduction, and cash flow all in one exchange. DST offerings are structured and offered as securities under the Securities Act of 1933, which requires the investor to be provided with a private placement memorandum or PPM. The PPM discloses various risks, fees, and expenses associated with the 1031 exchange and a DST investment offering. The PPM will also outline that potential investors must be accredited, which means they must have a net worth of $1 million or more, not including their primary residence, or have an income over the last 2 years of $200,000 for an individual or $300,000 for a couple. Businesses, trusts, and other entities may also qualify as accredited. Accordingly, the investor can now enjoy the best of both worlds: the disclosures of a security and the tax advantages of real estate.
The last point to consider is, do you want a fiduciary in your corner to help you through the transaction, or a commission-only transaction person? At NAMCOA, we are a registered investment advisor that does consulting through DST investments in the area of 1031, 1033, and DSTs, as well as opportunity zones, OZs. Let our decades of real estate experience be placed in your corner. Do you need assistance with the 1031 exchange, or do you have a question regarding commercial real estate? Give us a call or email at support@dst.investments. This video is not a complete explanation of all DST offerings and does not contain all the details of any particular DST investment. As described previously, those details would have been outlined in a private placement memorandum. We conduct due diligence on DST sponsors, provide portfolio modeling and other consulting services on 1031, 1033, and opportunity zones. Our objective is to achieve portfolio diversification by geographic location and asset type. Please let us know how we can assist you. For more information on current DST opportunities, or if you are within the 1031 identification process, please contact us as soon as possible to review your situation and financial objectives.
Thank you for listening.